Hi, my name is Raven McNabb. I'm with eXp Realty here in Arizona. I'm a stellar agent. That's what most people know me as, the stellar agent, because I sell homes the stellar way. I also assist home buyers with education, which is what you're getting in this video. But I also mentor other agents, teaching them how to be awesome so that they can help more home buyers just like you, the stellar way. So if you haven't watched the previous video to this one, I definitely encourage you to stop right now and go to that video before you watch this one. It gives you some highlights of what we're going to be talking about and why it's super important. Today, we're talking about the three key factors, or one of the three key factors rather. Today is all about financing, things that you need to know as a home buyer in the financing options available to you. There's a lot of options available to you, and choosing the right type of financing is essential to helping you save money and be a stellar home buyer. Knowing your stuff is going to help you in that negotiation processes. So let's get right to it. Financing. What is financing? It means that you don't have the cash in your bank account, or you do, but you don't want to touch it, because why? If you can obtain financing at a good rate. Financing is available to you where you're borrowing the money from the bank to make the purchase of a home. You probably have a financed automobile loan. That's pretty common, right? Most people have real estate that they are financing. Okay, but what type of financing do you pick? Well, it depends on your intentions of the property. It depends on what your long-term intentions are for the real estate investment you're about to embark on. So we're going to talk to you briefly about some of those options that are available to you and how you can discern for yourself which one's right for you, or at least be able to take notes so you can ask the appropriate questions when you're out home loan shopping before you go out to the homes to shop for and buy with your agent, me, your stellar agent. So financing is super, super important because it is the first step in the process of home ownership. First step, in my opinion, would be talking to a professional realtor who has ample resources available to you to give you some reputable points of contact for lenders in your market area that are able to serve you for your particular needs with this real estate purchase. If you haven't done that and you haven't met a realtor yet, but you know that you want to purchase a home, well, financing would be your first step. Most realtors will not take you home shopping until you know that you are qualified to purchase a home. That qualification comes from in a form that we call a pre-qualification document, pre-qualification form. It tells us, you as a buyer, me as your realtor, how much home you can qualify for. It also helps us be able to write an offer based on those details on that pre-qualification form to be able to negotiate a purchase contract and offer on your behalf once you do find a home. So let's back up a little bit. What kind of financing might be available to you? Well, there's FHA. That's a government-funded loan through HUD. There's conventional, also government, but in a different sense, right? Conventional is a little more stringent when it comes to qualifying criteria, but it also is less stringent in terms of private mortgage insurance and things like that. We'll talk about that in a minute. There's VA, that's for veterans, okay? There's hard money loans. We'll talk about what those are as well. There are down payment assistance programs available. There are assistance programs and grants available to and credits available to first responders and educators that help serve our community. There is a plethora of options available to you. So how do you know which option is right for you? Again, it boils down to what your intention is with the home. what kind of home you are seeking. If you're choosing to purchase a manufactured home, for example, and it's located in a community park where you have to pay lot rent, well, it more than likely is not going to qualify for certain types of loan programs, or there's going to be more specific overlays with that. Okay. Typically, you have to get what's called it's very similar to a hard money loan. It has much higher interest rates. If it's going to be your primary residence and it's a single family home or even a condo or townhome, okay, you can probably qualify for FHA. It just depends on the property. For example, if it's a condo and the condo has a high ratio of renters in that community, then it likely will not qualify for FHA. FHA requires a specific ratio of owned units and leased out units. So if it's over that threshold, then it won't qualify for FHA and you'll have to go conventional financing for that condo. But let's just put in our examples today so that we can keep the complications and confusions to a minimum. And I do welcome you to contact me directly for one-on-one conversations about what other loan programs might be available to you, as well as connect you with some reputable resources such as lenders that can assist you that I know have awesome capabilities and awesome loan programs as well based on your needs. So FHA is great because it's an easy loan program for first-time home buyers especially, but also home buyers that might have a little bit too much debt. For example, if you have student loan debt, you know, sometimes it's can be pretty sizable student loan debt, depends on what you went to school for. But if you have student loan debt or any other debt and your debt to income ratio is higher than 45, 44% or so, you can still potentially qualify for FHA financing, which is great because your goal is to buy a home, right? There's conventional financing. Conventional financing is a little more laid back, but at the same time, it's pretty stringent and strict on some areas. The higher your credit score on a conventional loan program, the better your rate's going to be in terms of interest rate, but also your private mortgage insurance rate is going to be better, a lot better with that higher credit score. So they are more credit based, but also they shorten the threshold that they allow for debt to income ratio, which is why FHA is really popular because it allows for you as a home buyer to have a little bit more debt in your financial portfolio, depending on the circumstances at hand. Now, keep in mind, these are just general scenarios that we're talking about and why financing is important, but also some options that can get your brain thinking about what kind of options are available to you and what questions to ask when you're seeking out your home loan to begin shopping for a home. Okay, so FHA is great. 3.5% is the minimum down payment required under FHA. Conventional is also great because conventional, you can cancel out your private mortgage insurance, which is attached to your principal and interest payment. And again, on conventional, that private mortgage insurance rate can be a lot less depending on what your credit score is. But the difference between FHA and conventional, FHA private mortgage insurance stays with the life of the loan, which in most cases is 30 years. Conventional can be canceled after you've achieved and obtained 20% of equity in the property. So meaning your loan to value is 80-20%, right? You have an 80-20 loan to value ratio. You have 20% in equity, whether you've paid it down or, you know, the market has done a great incline and you've obtained that equity. Your home is now valued more. So That's the main difference between the two. More credit-based, lower debt to income ratio required on conventional. FHA can allow you to push those limits, and 3.5% down minimum required for FHA. Conventional is 3% minimum down, but they also have a program that's a 5% minimum down program. The other key difference is FHA requires the home to be your primary residence, which means you live there primarily. You have no other properties that you're choosing to live in 6+ months out of the year. Conventional can be one or both. It could be a secondary home. It could be an investment property. It could be your primary home. Okay, they do have programs based on that. And your down payment on a conventional is also going to be determined based on the property use, the intent of use for that property. Another program is VA. VA is very similar in how it's structured and designed with FHA, with some varying differences. Those differences are that some veterans, depending on their certificates, can have absolutely no money down. They might have to put some money down. There might be a funding fee there that needs to be covered. VA rates can be much lower in some cases compared to FHA or conventional. It all just depends on the market. Keep in mind, the market changes every single day. No loan officer, no realtor can ever say for certainty with guarantee that any interest rate is going to still be that interest rate the following day, the following hour, or what have you. It is always cyclical, okay? But VA is great because it's a nice loan program for our veterans to tap into for all of their time in service for our country. So if that's available to you and you're a veteran, just know that there are some differing options with that, but it always is encouraged to weigh out your options side by side. You can do a loan comparison between FHA, conventional, and VA, for example, just so that you can to find out what the costs are, what your interest rates are for each, what your requirements are. More often than not, VA is going to be the way to go if you're trying to save your out-of-pocket money up front. The other loan programs that can be potentially available are hard money loans. Let's say you don't have a great credit score. Credit score is important for all loan programs, but each loan program has its varying degrees of what credit score requirements they have. But let's say you don't meet any of them, and you still want to purchase this home. Well, what can you do? Well, you can obtain a hard money loan. There are plenty of hard money investors out there that are willing to help you obtain that home ownership. Now, keep in mind, those hard money loans always have a much higher interest rate, sometimes double to triple what the standard interest rate is on an FHA or conventional or VA loan. Okay, it just kind of depends. Other things with hard money loans that some of them are temporary. They have a shortened time frame in which that loan needs to be paid off. So if you're seeking to do a 30-year loan, they're probably not going to offer you that. So you're going to need to be working on that credit or whatever situation kept you from obtaining traditional financing. You need to work on that so that you can either A, pay the home in cash at the end of that balloon payment with the hard money loan, or refinance into an FHA conventional or VA loan program and pay that hard money loan off. So then you're no longer paying more for the property than you need to, but they are available. So that's the cool part. So there's so many different options that are available to you in order to purchase a home. In some markets, there is also what's called seller financing. This is where the seller becomes your private bank. Maybe the seller owns the home free and clear. They have to move because they have to move for health reasons or family or whatever the situation might be. Every situation is different. But they own the home free and clear. And they're willing, if you negotiate it the right way, to carry the loan for you with a sizable down payment, and convenient terms that are going to meet the needs of both parties in the transaction, you as the buyer, but also for the seller, whether it's to hold it for 1 to 2 years, while you're working on credit, or maybe filing taxes to get you prepared. The seller will basically be the bank, and you can pay the seller for the property, but have home ownership, reaps the rewards of home ownership that way. So that is also an option for you. And again, it really determines on what is determined based on what market you're in. Not all markets have that ability or that option available to you. And I say that because maybe there's not many sellers who are willing to negotiate that way. But keep in mind that in real estate, everything is negotiable. So whatever it is, you want to purchase a home, have that conversation with your awesome stellar agent, and let's come up with some plans. Let's come up with some ideas. Okay. But financing is super, super, super important, because without knowing what kind of financing options are available to you, you could be wasting thousands of dollars. You could be in a program or a loan that isn't working for you on the long term. If you have a tight budget, things like that, not all mortgages are created equal. It's not, hey, I'm ready to buy a house, let's go get an FHA loan. That might not be the right loan for you guys. Conventional might be better, right? VA, if you're a veteran, that might be better than an FHA route. It all depends on what your financial situation looks like, your portfolio looks like. It all depends on what your credit score looks like. It all depends on what the property is, where it's located, what type of property, and what your intent is with it. Primary residence, secondary home, whatever the situation is, those details are important to know. Understanding that, not all banks are created equal is super important, because it's key to offering you the financing that each bank has available, so you're not missing out on programs. Some of those programs can include down payment assistance. Okay. If you didn't know now, you do now know that there are down payment assistance programs available to you that cover all of your down payment. Some or all. It just depends on the bank, what they offer, what your credit score is, what your debt to income ratio is, if you're a first time home buyer, things of that nature. Okay. Knowing what these programs are, knowing your options, helps you to massively increase your buying power. Having a stellar agent helps you to increase, maximize, optimize your buying power in the market that you're looking to purchase a home. The right financing can spell the difference often between getting your dream home or forcing you to settle for a home much, much less. So which loan program is right for you? Well, I encourage you to give me a call so that we can talk more about your hopes and dreams and goals for purchasing your real estate, your next home. And let's find what bank might be right for you that offers the programs that might be best for you to maximize your buying power and potential. Let's help you get into your dream home sooner rather than later. Let's help you find a home that you're going to love. And that home work for you in the future. Let's not forget, real estate is undoubtedly the best investment that you can make. Why? Because real estate is a hard money investment. Real estate never goes to zero. Real estate has been around for centuries. People have always looked for homes to live in, somewhere that they can lay down and rest their bones at night. Super, super important to know the value of real estate and its long-term potential for your life, your family, moving forward in the future. Knowing your lending financing options up front and also picking the best realtor, the stellar agent with eXp Realty to assist you in finding the best program available to you and the best home to fit that program. I encourage you to like and subscribe. Join me for future videos with tips and tricks on how to become a stellar home buyer that can be way more educated than most real estate agents out there. Thank you for taking the time to watch this video today. If you have questions, please send me an email at raven@ravenco.com. You can also reach me directly at 480-300-1222. You can find all of my information down below, and let's see what we can make happen for you. Have a great day.